Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial abyss of Hyatt Hotels Corporation's 2025 annual report, and let me tell you, it reads like a thriller novel with more twists than a hotel infinity pool. Before we jump into the deep end, if you love getting the real story behind corporate filings, hit that subscribe button and join our community. We've also got a Discord channel linked in the description where we break down these reports even further, so don't miss out. Alright, so let's set the stage. Hyatt is telling us they're looking ahead, anticipating future events. Now this is standard practice, but they're also cautioning us that the real results might be quite different from what they're picturing. They mention a whole list of things that could mess with their plans, like economic uncertainty, natural disasters, the usual stuff that keeps CEOs up at night. But they also point to potential issues with things like global supply chains and inflation, effects that might not be fully offset by higher revenues. It's like they're saying we think this will happen, but so many things could go wrong. Don't blame us if they do. Now, let's talk hotels. Hyatt is massive, boasting over 1,500 properties with close to 373,000 rooms. That is a lot of beds. They've got everything from luxury escapes to more budget, friendly options spanning across tons of countries. They're really spreading their wings globally. And when they talk about their money, they're speaking in dollars. But remember, these are millions of dollars. So when you see a number, imagine a lot more zeros behind it. Here is a quick look at their revenue streams. They've got these reimbursed costs, which basically means they pay for things like employee salaries at hotels they manage, and then the hotel owners pay them back. It is a way for them to handle payroll without it directly impacting their own profits and losses, which is pretty smart. Looking at their fees, their base management fees and incentive fees are up for 2025 compared to 2024. That is good news, suggesting their hotels are performing better. Especially those outside the US franchise fees are also up a bit, which is expected as they grow their network. Their owned and leased properties brought in more money too, mainly because of that big Playa Hotels acquisition we'll talk about more. It seems even with some property sales, the overall owned and leased revenue went up significantly. On the flip side, their distribution business, which includes things like vacation packages through Algae Vacations, saw a drop. They mention a decrease in people booking and traveling, especially to lower tier resorts, and they even blame a hurricane. That's a bit of a stink, showing how sensitive this part of their business is to external factors. Now, for the elephant in the room for 2025 transaction and integration costs. These jumped way up compared to 2024, mainly because of that massive Playa Hotels acquisition. It cost them a pretty penny to buy it and then to get everything sorted out. And all these moves, acquisitions, sales, and costs really show up in their net income. After making a profit of over $1 billion in 2024, they're reporting a net loss of $52 million for 2025. That's a huge swing, and it highlights the massive impact of those big deals they made. But here is where Warren Buffett's thinking comes in. While net income took a hit, their adjusted EBITDA, a measure that strips out some unusual items, actually went up slightly. It increased from about $1.1 billion in 2024 to $1.16 billion in 2025. This suggests that even with the acquisition costs impacting the bottom line, their core business operations are performing well. It's a nuanced picture. On paper, they lost money, but on a more adjusted basis, things are looking up operationally. Let's talk debt. Their total debt went up significantly, mostly due to the Playa Hotels acquisition. This pushed their debt to total capital ratio from around 51% in 2024 to nearly 56% in 2025. That's a climb, and for investors, it's something to watch closely. It means a bigger chunk of their funding comes from borrowing, which can be risky if business slows down. Looking at where their cash came from and where it went, operating activities provided less cash in 2025 compared to 2024, mainly due to those acquisition costs and higher interest payments. Investing activities, however, brought in more cash, largely because they sold off some properties, including a big chunk of the Playa Hotels portfolio they just bought. Speaking of Playa Hotels, this was a huge deal for Hyatt. They bought it, then almost immediately sold most of it to someone else, all while signing management agreements. It sounds complicated, and it was. This whole maneuver cost them a lot in transaction costs as seen in the numbers, but they also got a serious amount of cash from selling those properties. It's a bold move, trying to grow and streamline at the same time. In the end, Hyatt posted a net loss for 2025, while their core operations, as measured by adjusted EBITDA, showed some strength. The massive acquisition and subsequent sales, along with higher interest expenses, definitely took a chunk out of their profits. They're navigating a very dynamic market, balancing growth through acquisitions with the financial realities of managing a global portfolio. So, what is the verdict? Hyatt is actively shaping its future, making big strategic moves like acquiring and then divesting large portfolios. This shows a proactive approach, but also brings significant financial risks. As evidenced by the jump in debt and the net loss in 2025, the key will be how well they can integrate their remaining acquisitions and manage that increased debt load. They've got strong brands and global reach, but the competitive landscape and economic headwinds are real. Alright, that is our breakdown of Hyatt's 2025 filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.